So guys, hope you had a good weekend. Let's get back into it for the week. Now, last week we spent, okay, Constant, how you doing? We spent a lot of time in this sort of area here, and we also picked up this little guy here, and we sort of lived in the engine room and spoke about, all these little important little facets that need to come together for you to be a successful trader. And then in the end, we linked it all back into psychology and rules and stuff, and sort of looked at the importance of all that. And as I was saying last week, this psychology and rules area, this one right here, that is the most important. That's like your heartbeat. That is the most important thing that you need to get right as a trader. Remember, high level, what we've spoken about so far, doesn't really matter what tools you use, but it's important to know that if you use them poorly, you will fail. But most things are price driven, and they will let you buy it. You can use pretty much any tool. As long as you're buying at support, selling at resistance, you should be fine. Okay? But if you cannot get things psychologically right, by that I mean every person, every trader will go through psychological issues. By that I mean takes some losers, not getting into trades, those sorts of things. If you cannot get that right and have a set of rules to control your psychological issues, things will fall apart and you basically will never make it. In a blunt nutshell, if you like, you are never going to make it as a trader. So it's very important that you focus on that being one of your main sort of strong points. Okay? So for today, I thought we could talk sort of more open discussion, but I've made a few bullet points about trading strategies. Now, I'm not going to talk about, what a spot trader is and what a swing trader is and position trader. I mean, most of you should know that, and that's all boring. I was going to talk about sort of external factors that go into trading strategies that all link back to these sorts of things that you are probably, many of you, in the process of finding out, or you may be at the level of your trading where you didn't even think about it. So you might learn a few things. We'll get there, Boyke. We'll do a little session on that. A session. I'm not going to teach you how to code, but I will talk to you about ways of using automation. No problems. Okay. So, what do you think is the best process, guys? When you sit down, you trade specific strategies and that's it? Sort of like black and white? Or do you sort of do some analysis and try and read what the market's doing and then trade strategies to suit the trading conditions? G'day, Mr. 2M3. Right. See, many of the people I teach are like, oh, I only spot trade. Oh, I only swing trade. Obvious, yes, but most people won't. Well, it depends on what the time frames are doing. Right? See, if you're a spot trader only, and you sit down to trade today, and you like to make, because psychologically it's important for you to make money every day, although some of us, it's no big deal. For a lot of people it is. But if you only spot trade, and this was a 4-hour chart swinging down, and we were here in yellow, and you spot trade only, you're going to struggle to get in a trade, aren't you? Because ideally what's going to happen on the market that day, maybe from where you're at, is maybe something like this, back to some level of resistance before we may get some sort of continuation in that direction. And that that spot trade is ways up the road, and if you're waiting for confirmation and things, it's hours away. And if you're one of these people who maybe lives in the UK, has a day job, can only trade something like Asia, and this is the Tokyo Open down here, and you only spot trade, what you going to do? A lot of people, yeah, not much. Go to sleep, right? So that's, well, see, some people won't do that, and that's the whole question here is, well, if you can only trade a specific time of the day for a very short period, you might have to have trading systems that basically, or strategies that suit multiple different layers of support and resistance, let's put it that way. So you might end up, if you have to sit down and trade there, and you're expecting a pullback, and you've got 2 or 3 hours to trade, and we're in that yellow box, what are you going to do? What's your trade that day going to be? Yeah, but Tracy, you might go to work. You might be dead asleep. You haven't got all day to sit in front of the... Right, you're going to have to scalp your way long or something, right? If you need to make money that day. See, for some people, well, it's a 4-hour time frame, Lee, say. So if you get a 15-minute change of trend or something, you might long it. Could be some extreme daily pivots. See, for some people, they need to make money every day, and if they had to walk away and they don't make money for that day, and let's say they don't make money the next day, the old psychology starts kicking in a little bit. I wait for confirmation, Pravi, but that's just my personal. I'm advantaged to sit in front of the charts too many hours a day. Yeah, but the phone doesn't work, Cyborg. I mean, you need to look at a chart decently, right? Ever looked at an iPhone chart? It's pretty pathetic. Okay, so pending order could work as well at resistance. Go to bed. It'll stop up here. Big 50 pip stop or something. No big deal. Okay. So, what you need to do is, you got options, right? But it's sort of something that you need to decide as a trader. Do you trade specific strategies? Or do you trade strategies to suit trading conditions? Trading while working, guys, I'll tell you, trading while we've got 1 second, trading while working, believe me, does not work. Tried it. The moment you've got a trade, you seem to have to go to a meeting unexpectedly, and you're not coming back for hours. Or it gets in a trade and goes sideways or something, and then you've got to get in your car and drive for an hour to get to an office or get the train or whatever. Sort of doesn't work. And I've mentored several people who've tried to trade from work during London hours, and it sort of is a bit of a disaster, to be honest. Okay? At the end of the day, what specific strategies are completely up to yourself, but there's a lot of things we can talk about. Remember, at the end of the day, you're just going to need tools in the toolbox to get any trading job done. Okay? Very, very important. So, the type of strategies that we might employ on any given day can depend on a number of different factors. Yeah, but there's some people who can get their job done around Atlanta, and so they've got sort of bosses who are get the job done, no complaints, just get it done and no one says anything. But anyway, for example, just like I was explaining, the number of hours you can trade in a day is a huge factor. If you've got a full-time job, you're limited, aren't you? If you've got a full-time job and you're a family man or woman, that's even less hours. And if you're one of these people that, say, lives in the United States and you live in, say, the East Coast and you stay up and trade London and then you go to work and then you come home and, I mean, you've got limited hours and you're tired. There you go. It can be a little bit tough. So you need to maybe have some strategies, yes, that might suit those sorts of conditions. Also, there's another factor in where you live. Okay, that's cool, Jeremy. If you can make pending orders work, that's brilliant. Okay, where you live in Forex, this is why, I live in the worst place in the world for trading. West Coast of America is like the worst place in the world. It's got to be the worst place. My best market is Tokyo, and it opens at about 4 o'clock in the afternoon. No, 5 o'clock in the afternoon, my time. And then if I want to stay up until London, that's midnight, and if I'm up to New York, it's 5 o'clock in the morning. Versus someone who's, like, this year I went down to Australia to visit family in Melbourne. Asia, 10 o'clock in the morning. London, like 4 o'clock in the afternoon. And if all that doesn't work, we'll just come back for a bit in New York at like 9 o'clock in the evening. There's like 3 decent windows where you're perfectly wide awake and you can sort of make things work. So if you live in Australia, you can go to work in the morning, come home and trade London and New York. Dude, you're styling. I'm up there with something like Australia overall. Well, I live here, boys. Yeah, my family's here and I live in paradise. I mean, you can't beat the weather and stuff in Southern California. So, it's somewhere like Australia. New Zealand's pretty good. New Zealand's pretty good. They've had some good trading there. But Australia, I think, is even slightly better, and it's because it's exposed three sort of markets are decently tradable a day. So you could just wake up in the morning, go to work, come home, and trade London and New York. Or if you're going to go out after work, you can come home and still trade a proper market like New York from like 9 o'clock in the evening till midnight or something. You can get a decent market under your belt. And that's a huge, huge advantage to your trading. So, if you live like me, where you've got the worst trading conditions on the planet, it's going to affect the sort of strategies you could use. Especially if you have a day job. Because you've got Tokyo, which you might be able to get home to. If you have a day job living in California, you've missed New York. And then London's probably out of the question unless you're a night owl. So, it's something that can be a real factor. So, what do I mean by trading strategies? Well, like Jeremy was saying, I use pending orders. That's something you might have to look at. You might have to look at things more like, if you get home from in the United States and you can trade Asia, and like I was looking at before, it's at support on a 4-hour chart. The pullback is hours away in London. You're going to have to get good at trading or scalping your way against the trend. You're going to have to get good at maybe looking swing trading by using pending orders, something that you might, an area of resistance or support you might put in play, and hope that while you're sleeping, things go to plan, takes your trade, and off you go. Lucas, no, I don't trade London because I'm not a night owl. I'm a morning person. I trade Asia Tokyo and New York. I get up early and do New York. Right, and so it's a big problem, so you got to be a little bit careful. And this is where I will discuss maybe next week, automation can come in and help you a little bit here. Okay? Also, your trading experience, guys. Just, you're going to have to limit the number of different strategies you use if you've got limited experience. Remember, just trying to make some money here in these markets. And while there's 100 different strategies you might be able to employ every day, while you've got a lack of experience, you just might want to stick to 2 or 3 and get very good at them. And then once you're good at them and it's sort of second nature, you start introducing other things. Okay, quite important. Some people will try, I was given the analogy today, I would rather start trading with a wheelbarrow than a Ferrari and work my way up to a Ferrari. If you think you're going to start trading with a Ferrari, racing around the Forex track, you're sorely mistaken. At least I'll get around with a wheelbarrow, and then I'll get myself a bike, and then I'll get myself a little car, and I'll build it up. Okay? But if you think you're gonna have, umpteen dozen ways of trading and everything down pat, you're a little bit mistaken. Okay? Time of day can be a huge impact to your trading. Can anyone tell me why? Yeah, you get a whole lot of new money in the markets, right? So there's three times of day. There are 3 times of day where time of day trades are critical. Now, by time of day strategies, what am I essentially saying? Yes, money's coming in the market. So what are we actually looking for? What about set and forget, Boygie? What do you mean? I'd love to be able to set and forget trades. Right, so we're looking for support and resistance on a market open. Okay, so if our euro dollar looks like this on like an hourly or 4-hour chart, and in yellow here, and we're getting some little confirmation, and we're close to Asia opening, so our 15-minute chart is sort of rolling over here. That's at support in an uptrending market. You're going to want to employ the old time of day strategies to long that thing. Okay? And then see if we're going to go make higher highs and get some new direction. Okay? A quick example of something else. We'll just go to the euro for today. So New York opens and we're at resistance. Hang on, let me zoom out here a little bit. We're at a level of resistance in a downtrend. In fact, let me show you here. We're back in an area through here, which is also a hourly 21.55 area. Hang on, let's go change color pen here. Okay, up here. So it's a known area of resistance. New York is opening. Tracy, in a high majority of the time, it will push price in a direction. But, there's some caveats to it, right? See, if you're going to be a time of day trader, or employ time of day strategies, and you've got New York opening here, obviously your goal is to do what? Go and make some lower lows and continue direction, right? So maybe we're looking to do something along these lines. We pull back, and that's what we're looking. Tobias, I have no idea because I hardly look at the stock market, to be honest. I very rarely look at it. I just look for support and resistance on my Forex charts and be done with it. I try not to get complicated. So that's what you're looking for, right? So what you're looking for is a session at resistance. So here's New York, and you are looking for it to push price to new levels. In this case, a downtrend. So we're looking to break previous support and continue. But what happens? New York ends and price has not got the job done, has it? New York is ending in this area here. That's when London's going home. London's going home. Everything's sort of drying up. Okay, so if that's the case and you're here and New York is closing, what's that telling you? Volatility is going to dry up. Okay? And if you think, if you have not broken new lows, we're probably going to see a bigger pullback. So we're probably going to maybe see something like this now. Up, New York failed. Maybe something along these lines before we might see something like that if we're going to continue down. It's very important if you're going to take time of day strategies, you take these things into account. Not only the entry, but like we were talking about a lot last week, the exit. Okay, so you're trading along, you're short from New York, yada, yada, yada. This is lovely. I'm up a nice big chunk of pips. And now suddenly New York's drying up and we're at support of this little move from London open. Oh. And New York's drying up here. That's potentially going to cause me a problem. I needed New York to actually make me a new lower low, so Asia will give me the fade, and then I get that. That ain't going to work no more. I would be very careful with that idea, Tracy. I've never really looked at that, but I would. You'll see days, Tracy, where we haven't been back for days to the 200 until today. But anyway, so that's all good. Right, so 50 pips, I mean, I would honestly, see what I would have done with that as a management thing is I would have, see, time of day is very critical sometimes, right? New York open, great. Shorting, New York closing, I would have been tightening my stop down here to say, you are going to just continue. Otherwise, you can take my stop and I'll just take my pips and run. Because you're here at a higher low with respect to that one. At a market closing, volatility drying up, and we're ages away from a new market open. I'm probably going to expect that, then that. Now, if we're going to continue down. Okay, so time of day strategy is very, very, very important. So knowing what market's doing what is quite critical. Okay, so you see the Friday, Asia gave the fade, London open, down, New York continued, and we just sort of continued it down. So support and resistance, see the support here from London, broken, continued down, pull back. So time of day sort of worked in your favor. Which one? This New York, the New York one, Tobias, you mean? I would have entered it based on more the fact that, okay, so talking of strategies, right? Lately, let's just pause for a minute and talk about something. What is dominating the markets on this 4-hour chart, on this Euro chart here? Is this technical or fundamental dominating this market? Fundamentals, new stuff, right? It's all the worries here and Greece still and jobs and debt and you name it, it's all a problem, right? And so see, if it was technical, we would have been doing this on the way down. Even if we're coming down, we would have been doing this. But what also tells me fundamental is how technically on this 4-hour chart we were sort of messy but upsloping. Okay, and then suddenly, boom, nothing stopping it, it's just falling through the floor. That ain't technical. We trade it technically at resistance in the trend, but it is fundamentals which drive it. And if you don't like that idea, well, too bad. Okay, so, well, once you've realized that you've got fundamentals dominating the market, maybe, and the way you can see it is, to me, is basically from here. This is how I can sit down and determine whether it's fundamentally or driving it or not, guys, is how no levels of support. See, if I put a fib of, say, the latest major move up, maybe from here, okay, where nothing is stopping at support. See, usually price is going to come down, give you a bounce, technically give you a bounce, right? But nothing going on. Well, I have Trade the News, and I use just look at the charts to determine. I mean, see, you have these in Forex. We're sort of getting off the beaten track here a little bit, but it doesn't matter. We've got plenty of time over the coming days, weeks. When you trend, technically, it goes like this, right? And then eventually it might run into some resistance of some higher level. And then so when it changes trend, it does it like steps its way over, and then we sort of get that sort of effect. We go from an uptrend to a downtrend. But when fundamentals get involved, things go like this. Hello. Hello. Boom. They change trends. So if you see that on like an hourly or 15-minute chart, that is on a technical chart, that is quite possibly retail sales data, trade balance, interest rate decision, that sort of thing. Okay? But when you see that pattern on a 4-hour chart, that is like a global, oh my God, we've got the pigs are a real concern in Germany, in France, we don't know what to do. And we don't know, this is going to be a real concern. Oh my God, New York just had its worst day, like in 8 years. And oh my God, the president's going to speak and all this sort of stuff. That creates these big 4-hour type, big changes. Pravinos, look for support and resistance as per my strategies. What are you referring to, Lee? Which chart? Okay, so that being said, yes, I will take a look at that in a minute, Lee. Okay, on the euro, is you're going to notice that once fundamentals start driving things and you get some real trending, what about it, Rick? Forex is a zero-sum game, right? For every buyer there's a seller, or every seller there's a buyer. So for everyone who wished to sell, someone was willing to buy it. That's Forex for you. So if you want to buy the Euro USD right now, I might be willing to sell it. Standard lot, yeah, I'll do that. And it's a zero-sum game. One of us is going to win, one of us is going to lose. Okay, so when you get volatile moves, guys, very quickly EMAs become your friend. So you'll notice that once we started trending and our volatility came out, we got a 21.55 cross here. That's the red and blue lines, correct? And we basically hugged the 21, pulled back later on, hug the 21, hug the 21, hug the 21, hug the 21, pull back, and now we're doing this sort of thing. Well, what you can do is if you think that fundamentals are driving these markets, and it is a fast, volatile market, 200 EMA, Tracy, and it's a fast, volatile market, you can use pullbacks to these EMA areas, okay, as areas of support and resistance. In this case, resistance in a very fast downtrending market. So as part of your analysis every day, if you read that real concern in Europe, markets are tanking, you've got your CNBC on, it takes a bit of experience. You can use, EMAs in a fast trending market are excellent areas of support and resistance. Because one, you can use the 21.55 area to get in, and, a stop above the 55 in a downtrending market is usually pretty good. And then you can take into account the fractal nature of it. Okay, so once we've broken maybe that 21 on the 15 minute, we did there, we did here, where's it going to go? That's it, cyborgs. Correct. 8 is an SMA. So you've been shorting, you're shorting. See, let's say you do this, right? Let's say today you're trading along, and let me just move across here. And you see we've been hugging this 21 EMA. We have no idea. 21 EMA coming down through here. You have no idea when it's going to run out. And we're approaching London Open, sort of finds a bottom, pulls back, and you take a shot. Fibs the rise, deals you a loss. Stop above here. Automatically, where is it going next? Where can you say we're going next? No one's put the right answer in yet. Okay, I said, think, we're in a fast trending down market. We're in a fast trending down market. You want to be shorting, correct? Your fundamentals, technicals are telling you, because your 4-hour chart's just got obliterated. The trend on the 4-hour chart just changed like in a heartbeat. Boom, goodbye. This market's going somewhere to the downside. You want to trade it, right? Been trading off the 21, oh, broken. Where are we going? Obviously you want to short it next, but where from? We're on a 15-minute chart here. Obviously resistance. Thank you, Constant. If your 15-minute trend is over, guys, off we go to the hourly. Just lift it up a time level, and then get it back to that 21 EMA area on the hourly. Okay, it breaks it a little bit, but if you've got to stop above the 55, you're fine. Boom. Okay, it fibs the rise, but you were up over 100, well over 100 pips on that short if you took it. Change of trend, aviator. You're an aviator and you don't know that? You don't know what a Charlie Oscar Tango is? No, I said Tobias, I was on a 15-minute chart, and I said, where would we go next? Fractals, dude. You're a boot camper. Ex-boot camper. fractal nature of the market, people. And once this runs out, see, once this hourly runs out, I'm telling you guys now, this hourly is going to probably break this 55. It's breaking the 21 again here. Where are we going to go now? If this breaks this sort of level through here and we head up, where are we going? Where can you automatically plan your next trade from? Right. Get up to the 4 hour here. Look for the 4 hour resistance and then maybe wait for a little 15-minute change of trend and short it. 4 hour 5 Lance is gone. It's riding that to the upside right now. So that's how you can use that's a strategy based on like EMAs and fast moving fundamental markets. I thought we'd just pop that in there while we were talking about it. Okay? So time of day, and that links in guys, time of day strategies, they link in very closely with support and resistance because ideally you want time of day to be at decent levels of support and resistance. Because I'm going to wait for confirmation. 4 hour 21.55 area, you're going to wait for a confirmation to short that, like a 15-minute change of trends. You're not just going to take it. Because if you do, you're going to need like a 100 pip stop on it. Okay. So, thin market conditions, guys, or holiday period is very, very critical. Okay? I'll show you something here. Let me see if I can show you something. Beautiful trending market through here. Isn't that lovely? Nice big sort of channel to the upside. Ride that bad boy up. Followed by quite a bit of choppiness, right? In the yellow. Agreed? Sideways market. Agreed. Reason equals summer holidays. Summer holidays for you people. Right there. That's very, very, very important. I change my trading strategies wholesale when it comes to summer holidays. That sort of June to July, August. In the future, when I'm a lot more successful, I'm planning on having 2 months off every year. I'm not even going to bother rocking up to my charts. I'm going to go and live in some mountains or on a beach or something because it's just quite difficult to actually trade quite often. Okay? So you need to be thinking about that. And where is it most important? See, your EMA-based trading, see here where I've put the trending line up, that EMA-based trading that I was just explaining to you about with the trending up, riding the 15, riding the 15, doesn't work, riding the 21 on the hourly, doesn't work, 4 hour, and then suddenly you're in this big fat trend and off it goes, works really well. Look at the EMAs through here. Doesn't really work as much, right? So, big fat trending market, EMA is very good. Sideways market, what's important, what could I use in those sorts of conditions here? Like, if we go into a 4 hour chart, if I went to a 4 hour chart in that period, I mean, it's pretty messy, isn't it? Fibs I like, oscillators will work, so maybe some visual trend lines would work. Pivots and stuff, probably not going to work so well. Lee makes a very good point. I will not try and buy and hold something in summertime. If I trade Asia and make 50 pips, then I'm going to dynamically jam my stop and hope for an extra bonus point or two. But if that fails, I'm taking my 50 pips for the day and running. You'll find in summer that if you're used to one of these traders that gets what I call a dump truck trade, where you wake up and then you're up 250 pips, a guy at the front door asking where to dump the truckload of pips. If you're used to that sort of trading, that is going to psychologically affect you when the summer comes around, because they just don't exist anymore. I have no idea, Aviator. I've never worked. I don't do percentages. I just have a lot size I like, and 50 pips off I go. Because it all calculates back to how much I can live off and all that sort of stuff, right? So I will instead of looking at EMAs and stuff and those nice big trending markets, oh, I'm just going to buy it, support, let it run. I'm going to just fib up the move fibs on hourly charts and stuff, and I'm going to trade them, and if I can make higher highs or lower lows, I'm getting out. And in those, yes, Boyke, in that sort of Christmas period, yes, very much the same. See, you'll notice what's happened, right? Here's sort of the summer period through here, in this little window here, pretty much. And then the moment summer finishes, basically, and we all come back, fundamentals creep in the market, money comes in, oh, we are going somewhere. So basically, since the money's come back in the markets and the holidays are over, we've just got on this giant US dollar buying spree. So, time of year, guys, for summer holidays especially, critically important that you may look to change your strategies during that period. I'd rather scalp my way around or basic spot trade than anything else. Because you'll have some days in here which are basically just giant whipsawing days where the range will be 100 pips in a day, and price will swing its way down from Asia, New York, swing its way all the way back up, new lower low, but then swing all the way back up, big pullbacks and swings, like almost like 7, 8, 6 swings and stuff. And then you'll see things like this a lot as well, where you'll trade like the fib of this rise. You'll technically trade that long through here, and then it just comes up to a fib of the fall, and then they just short it all the way back down. Then there's a fib of the rise, and they long it. It just becomes a giant fib war. So you might as well use those to your advantage and not get creative. Okay, just to wrap things up, guys, we can talk a little bit about this later on. We've mentioned fundamentals and technicals driving the market, and also, lastly, your available capital. If you don't have much money, guys, you're going to have less risk in the market, pretty much. Okay, if you haven't got much money, you can't really position trade or have 100 or 200 pip stops. You're going to have to sort of think about scalping your way around or spot trading where you're not risking as much, and taking things like that. If you're interested in position trades and stuff in the future, you're just going to have a bigger trading account. Okay, but we'll talk about a little bit more about that also tomorrow. Okay, we'll wrap it up there. That 45 minutes went real quick. Have yourselves a good rest of your day, and we'll catch you tomorrow. Cheers.